Welcome to Second Take, the show that focuses on the issues behind the news. Mining Weekly editor Martin Creamer joins me today to unpack the latest in the mining industry. Welcome, Martin.
Thanks, Ashni.
Now, as the country deals with severe power cuts, Minerals Council South Africa is urging more rapid private sector participation.
Yes, I think Minerals Council South Africa were correct to again remind South Africa that they have members who have got 100 billion rand in their hand, willing to spend to give more than 6,000 megawatts of power in a short term. And if you're going to say short term, it's going to be renewable and clean. Now, if you'll see some of the statements of Eskom, they say we need 6,000 megawatts. Well, the one hand is offering and the 6,000 megawatts with no need for tax outlay. It's going to come from the private sector. So it's like a no-brainer. And you've got the state side saying we need 6,000 megawatts now. So you wonder why they just don't get going flat out. I mean, what is it that would stop a government from allowing the private sector companies to invest 100 billion in the number of megawatts that you need? So I think they need to open the door wide, because the little bit of red tape that's still there just needs to be cut away. They've been cutting away the red tape, but there still always seem to be some obstacles down the line. And I was glad that Minerals Council South Africa, emphasized that again. Let them move quickly. The word quickly is being put in place again, because it seems like it is the way to go for a government to get the private sector 100 billion rands worth immediately. And in 18 months, we'll have the 6,000 megawatts.
Now, according to Namibia's presidential economic advisor, Southern Africa needs a collaborative energy approach, much like that of the EU's.
It's amazing how Namibia is always ahead of South Africa. When it comes to renewable energy, green hydrogen, they not only have got the leadership in this region, they've got off-take agreements already in place. When you see a European meeting, they're there. And if you see COP27 in Egypt in November, they will be there. And we have lagged. We are lagging because you don't have a champion at the top. Now, with Namibia, they seem to be working collectively. Although they've got a lot of uranium, they've got a lot of other possibilities, they don't let that get in the way of a new opportunity, a new global opportunity, green electrons, green molecules. So renewable energy, they've got wind and sun there, and you can turn that into renewable molecules, green hydrogen. And the world is just saying, we're going that way. And we know that after the Second World War, they wanted to go for hydrogen, but they made a mistake. They said, well, let us go for, the hydrocarbons, and it'll not necessarily come from any hostile countries. But you can see how hostile it is at the moment. The massive mistake was made. So Europe is correct to go flat out with this. And I think the United States was correct to offer even more incentives that almost had the people with the European projects wanting to rush over to the United States. But at the same time, this whole new era offers you energy independence, offers you energy sovereignty. And Namibia is saying, let's not be stupid, guys. Let's work together here, at least as a region, the South African Development Community. But let's also get the African Union to give an overall legislative framework and to copy the EU, because we've got no time to really look at it. So it must be EU-like. It's there for the taking again. And it just needs people who are being paid by taxpayers to sit down and get it done. And so I hope that something comes in the Southern African region, because it's no good, us putting in a pipeline, then they put in a pipeline, then we put transmission lines, they put transmission lines. I mean, there's going to be a waste of money. Let's look at a big master plan and go for it.
Lastly, Martin, the World Platinum Investment Council's new CEO sees much opportunity for global platinum investors as the world moves to decarbonization.
Yes, I'm thrilled that there's a new thrust now from the World Platinum Investment Council. They've been going for a number of years, doing quite well, but in difficult circumstances. And now you've got Trevor Raymond, who's got all that mountain of research that he's been building. He's going to lead the organization. He's got a good team, a wider team. And he's saying he's not predicting anything, but he's saying, let's make a huge effort to increase the numbers of people looking at platinum, because it's something that is going to be part of this whole energy transition. Decarbonization, it's happening around the world. It has to happen. It's part of the Paris Agreement. It's part of saving the planet. It's part of making sure that we don't have these terrible catastrophes all over the place, which seem to be coming at a much greater pace. And so he's saying it's a great opportunity. And I'm glad they're speaking in those terms to try and persuade people to see how key the platinum is and how key platinum group metals are. We can see that China, has got the message, putting up a massive big center in Shanghai, and that will be linked with Anglo-American and Honeywell, with companies we know, but also the World Platinum Investment Council right there. They're going to have these Shanghai conferences to push this. So I think we're entering a phase now where there could be great acceleration of momentum. We're already seeing the momentum where people are looking at the potential role that platinum plays in generating green hydrogen from electrolyzation and then in the fuel cells. So I think that what the world was a bit myopic when it looked only at electric vehicles, battery electric vehicles. Sure, they had their blinkers on there. They didn't look at the whole picture. If you look at the whole picture, you can see that there's only one solution. That you go with renewables and green hydrogen, because that takes you across all the hard-to-abate sectors, the steel industry, the cement industry, everything you can, not just, nose to nose with two cars. And I think that was very short-sighted of the people that have rushed into doing things, because they're going to find that this is a much better way for everything, starting with the hard-to-abate, coming into shipping, coming into trains, coming into planes, coming down to trucks, and then everything, because you'll have the infrastructure. And they might have a relook at the way they've approached this, which I think is very bad, very short-sighted, but massive publicity was going into it, huge. And I think a lot of them have rushed in a direction where they might find, hey, we're going to have to change in a different direction, or otherwise at least combine our battery electric vehicle thrust with, the green hydrogen thrust, renewable energy thrust, because that's holistic.
Thanks for speaking with us, Martin.
It's a great pleasure, Sashni.
That's it for today. Join us again next week for more news analysis on the local and global mining industries. To subscribe to Creamer Media's Engineering News and Mining Weekly, please email subscriptions at creamermedia.co.za.